context. Oh, and by the way, this whole presentation is in honor of the man who made this whole gold bubble possible, Ben Bernanke. So here's why we're going to invest in gold and gold stocks for the next few years. This is the U.S. national debt from the 1900s, and it's actually with the U.S. government's projections till 2020. You can see everything was going not too bad, actually, until about 1971 when Richard Nixon took the dollar off the gold standard. And things went a little crazy after that, and now they've gone beyond crazy. That's not even a hockey stick chart at this point. I don't know, what would you call this? A moonshot. So, government debt is out of control. It's going to be, according to the U.S. government's own reports in their budget, over $23 million by 2020, which is up from 15 trillion, or sorry, did I say million? Trillion. 15 trillion right now, which is a 50% gain in 7 years. That's not bad. Wish we could get good investment returns like that, like they increase their debt. But that's not even the whole story. The total U.S. federal government debt, they don't actually account for it properly. They account, every company in the U.S. has to account for their accounting in generally accepted accounting principles, except for the U.S. government. The U.S. government, if you actually took their debt and liabilities under generally accepted accounting principles, it's over 75 trillion now, and that's because they take things like Social Security and they include it as income, first of all. If you can imagine a private company doing that, taking the pension contributions of the people and including as income, and then they spend it right away. So that's why the actual debt and liabilities of the U.S. government right now is over $75 trillion. Now, if you have a calculator that does big enough numbers, which is hard, 75 trillion just divided by the amount of people in the U.S. works out $245,000 per person in only U.S. federal government debt and liabilities. So a family of four has $1 million of debt and liabilities of the federal government overhanging it in the U.S. So this is a big reason why the U.S. dollar is going to die. Now, it's hard to even imagine these numbers. So this is up $100 million in terms of $100 bills. So those are $100 bills on a pallet. That's $100 million. This is $1 billion. So like Dr. Evil in Austin Powers, $1 billion. It's about 8 pallets. Here's $1 trillion. That's the original pallet right there. It's double stacked, as you can see. Now here's the actual admitted to debt of the U.S. government. Oh, sorry. This is the total debt and liabilities. It's over $75 trillion. It's the one on the right in $100 bills. You can't even see the initial pallet. That's it right there. So that's one way to sort of visualize the kind of debt and liabilities that they have. Now it's gone to the insane level where the only people who are buying U.S. government debt are the U.S. government and the Federal Reserve, which is the central bank of the U.S. government. U.S. intergovernmental, so these are the debts owed to people like Social Security, is almost $5 trillion. Federal Reserve now has bought $1.65 trillion. They're the biggest buyer of government debt. Long-term government debt, they currently buy 90% of all the securities in that market right now. So they've already surpassed by a long shot the biggest actual other owner of U.S. government debt, which is China, which owns a little over $1 trillion. Japan about $1 trillion as well. And they talk a lot about those oil exporters being greedy and all that. They own $250 billion, which looks like nothing compared to the Federal Reserve and the U.S. government. So what I'm trying to say here is the U.S. dollar is dead, and it will be dead, and I can't believe it's not dead yet, but it will be soon. This is the money supply of the U.S. government since 1960. So again, up until 1971, everything was going fine. You know, it wasn't too terrible. I could have almost not been an anarchist in 1960, but in 1971, everything changed. And ever since that first wave of the financial collapse in 2007, it's gone near vertical. So this is the amount of money supply. So Ben Bernanke is printing currency units like crazy. And he actually has no option. That's the only thing he can do at this point. There's no other way out. Now, some people say we're here in Canada, so that's just the US dollar. Well, look at everything else. Here's the euro. It's only been around for about 12 years now. This is something that they stipulated. They said there's, you know, all these government agencies, they always call these things. They said the EU Stability Pact. This is what they said when they first launched the euro. They said no country in the eurozone could go above 60% debt to GDP. Almost every country in the eurozone is now beyond that, including Germany. Germany is right there at 82% debt to GDP. The only ones that are less than 60% are just some of the newer countries that have joined, and they'll quickly catch up. The euro will be dead inside of 2 years. Now, we're here in Canada, the People's Republic of Soviet Kazakhstan. Sadly, it's actually not even that too much anymore compared to the U.S. This is actually the capitalism capital of the Western world at the moment, which is scary, considering how socialist and communist it is here. So the total debt and liabilities per person in Canada is about $2.4 trillion. If you divide it by the amount of people in Canada, it works out to about $70,000 per person. So it's not as bad. Canadians are always a little better, and they always like to point that out. But for a family of four, it's about $300,000 just of Canadian government debt and liabilities. So it's actually not all that great here too, but this is the best one in the whole Western world right now. People say, oh, the Canadian dollar is so much better. Well, it's been doing exactly the same thing as the US dollar. They've been increasing the money supply dramatically since 1971, when the whole world was forced onto a fiat standard. The money supply has gone up dramatically. The purchasing power of the Canadian dollar has gone down from 100 in 1971 to under 10 now. So it's lost basically 90% of its purchasing power since 1971. So the Canadian dollar is nothing special. And does anyone knows what backs the Canadian dollar?
Nothing.
Yeah, basically nothing. It's
US dollar holdings.
That's right, US dollar holdings, which is basically nothing. This is the total Bank of Canada reserves. US dollars is by far the biggest, at 28 billion. The rest is mostly euros at 18 billion. That'll quickly disappear. They have some special drawing rights, those SDRs. That one on the right that you can barely see, that little very thin line, is gold. The Canadian government sold all their gold in the 80s and 90s, didn't even really tell anyone. No one in Canada knows any of this because well, everyone watches Peter Mansbridge and CBC News, right? The government news channel. They don't tell you this. So I actually drew up I tried to show what the total amount of gold held by the Bank of Canada or the Canadian government is in actual, like, real terms. And I took the prime murderer of Canada, Stephen Harper, and this is an actual reserves to scale. That's the total amount of gold that the Bank of Canada and the Canadian government own. It could fit in his closet, and it could be there for all I know, because I don't even know where it is. That's the total amount of gold backing the Canadian dollar right now. Now, a lot of other countries are starting to buy gold. China, Russia, all these so-called old communists. You know, we have this, everything flip-flopped about 40 years ago. The Chinese, the Russians, the Soviets, they used to be all communists. Now they're the ones actually becoming very capitalist. So everything's flip-flopped. Canada's sort of in the middle. But my point is that the Canadian dollar is when the US dollar collapses, the Canadian dollar will collapse with it, in my opinion. There's nothing backing the Canadian dollar except for the US dollar. Not to mention that the economy of the US, or of Canada, is 90% of the trades with the US. So when the US starts to collapse, and it will collapse, and it's going to be brutal over the next few years, Canada's economy will go down dramatically. And the Canadian government will do the same thing as the US government. They'll start to look to, they won't have any tax revenues, and they'll start to take away assets from their citizens. So, why are we going to own gold and gold stocks? Well, first of all, let's talk about what they say on CNBC and stuff, that gold's in the bubble. That's total propaganda, total myth, and here's why. First of all, here's the total amount of gold held by individuals for investment purposes in their portfolios